Hey folks, welcome back to the channel. This is Jason, Certified Financial Planner, host of Fighting Words Financial. I really hope my subscribe sign is straight today. My wife complained to me for about 5 minutes that in one of my recent videos that it wasn't straight, and I don't want her to be on my case about that anymore. Anyway, I'm coming at you today with another unscripted video all about the recent dilution with Nio, Xpeng, and LI. So I did a video back on November 25th predicting that all three of these companies would have a secondary offering to raise funds. I was surprised by the number of negative comments. I shouldn't be surprised by the number of negative comments that I got from that video. Largely, I shouldn't be surprised because I realized that at this point, Nio lovers, Xpeng lovers, Tesla lovers are all sort of separating into these religious-like camps where logic is just tossed out the window. I mean, I got all kinds of I got all kinds of comments on them that I left that are pretty negative. You guys should see the ones that I deleted where people were just calling me names and things like that because I said something that was relatively neutral about a company that they're invested in. Investing in a company is not like having a religion, guys. This type of irrational attachment to something like that should not have a place in investing. And if you remain irrational about your choices in investing and how you go about things, it's going to burn you in the end. There have been a couple of cases where that irrationality has really paid off, like Apple, for instance, and of course Tesla, for instance. That irrationality has paid off in the end. And I've even done that myself. I bought Tesla when there was no reason to really own it. Their fundamentals were terrible. I bought it because I believed in an idea and I wanted the future, the vision that they had to come true. I wanted that sustainable energy future to come true, so I invested in that vision. It wasn't a smart economic choice on my part. Yes, it looks so now in retrospect, of course, but to be honest with you, I base that completely on heart and very little on rationality. And yes, it's paid off. It was just luck. If I sat around thinking that my investment success has all been about my own genius, then I would constantly be making the same mistakes that I was making 20 years ago, 25 years ago when I first started investing, and I would never have learned anything. So kind of one of the first points I want to make about the EV stocks that we talk about is don't have an attachment to them that isn't logical. Now, I'm invested in Nio. I'm invested in Xpeng. I have shares in both of those. I'm not invested in LI, largely because I just can't invest in everything that I want to. I don't have unlimited resources. And so I have Nio, Xpeng, and Tesla. I have those stocks. It's not that I believe in them. I'm convinced by the weight of evidence that these companies have a future of some sort. So let's talk about the dilution that's going on right now and why it's good for all three of these companies and kind of the things that all three of these companies need to accomplish. But before we do that, let's talk about Nio in particular. The sort of hysteria and mania that surrounds Nio right now, you really need to take a second look at that. And let me talk about why. When I talked about the reason that Nio would need to raise money, I said, hey, they may want to build their own factories. And there was this slew of comments about how they don't need to build their own factories. JAC does it for them. They just need to design new cars and that sort of thing. Okay, look, guys, the comparisons to Apple were made over and over and over. And Nio looks like right now they're trying a new avenue when it comes to car manufacture, which is they're going to be the Apple of car manufacture. They're going to come up with the software. They're going to constantly innovate. They're going to have other people manufacture their products for them, and they're going to really focus on innovation and constantly coming out with something new. This is not a terrible concept. In fact, Elon Musk just talked about this the other day. He says, that he thought that moats were silly, and the idea of moats were silly, and he was kind of making fun of Warren Buffett. Actually, this was a while ago, so it wasn't the other day. But he was talking about how moats were silly and the pace of innovation is what counts. And, and a lot of folks say this is what Nio is focusing on. Nio is not doing this by choice. They had plans to make a factory. They had plans to build their own factory in 2019, and they were forced to abandon those plans because they mismanaged the pace of when they needed to go back to capital markets to raise money. I think they've learned their lesson at this time, and now they're using capital markets to raise money to do that. The funds that they have right now are earmarked to going to expanding their sales network, expanding some general corporate purpose, or spending money on general corporate purposes, and they said using that money for R&D research for driverless, for full self-driving. Okay, that's all good reasons to raise money and spend that. But they don't not have a factory because they have this better strategy. They ran out of money, and even the space that they even went through the trouble of getting a manufacturing license, which is extremely, extremely difficult in China. And you have to jump through a lot of hoops to do that. They abandoned those plans. From what I understand, Tesla actually took over the location where they were planning to build their factory. That may or may not be true. I haven't verified that. But look, this is not something that they did on purpose. Like I'm not going to harp on that point anymore. But the other thing is, and I made this point before, JAC is doing their manufacturing for them. They have a rather onerous contract with them where Nio pays them a per vehicle fee that's somewhere between $2,400 and $25 per vehicle, in addition to the cost of making that vehicle, in addition to providing the money for all of their factory upgrades, in addition to being responsible for any losses taken per vehicle. So this is not a contract they want to be under forever. They need a better manufacturing deal, or they need their own factory. They may not need their own factory. If you guys have never been to China, and I haven't been there for a long time, you can't understand the scale of unused manufacturing capacity there at any one time. It is the factory for the world. If you go to Shenzhen, or like the Pearl River Valley there, where I think something close to 60 million people live there today, even when I went back there, it was just factory after factory after factory after factory. It may be that they don't necessarily need to build their own factory. They can take over some other space and retrofit it to their needs. But when you look at what Xpeng is doing as far as their smart factory, they have a factory that can essentially build 100,000 vehicles a year right now with only 600 employees. Almost all of them are engineers. That's an incredibly efficient and well-automated factory. And they're going to have manufacturing efficiencies and gains on margin that Nio is not going to be able to match. Any gains in manufacturing margin are going to be shared with JAC, and JAC is going to be able to take those as further profits for the company. So what Nio has decided to do instead is focus on being a lifestyle brand for right now. Right? They have the Nio houses, they have the Nio line of clothing, and they do have a stronger position in branding than it comes to any other company. They really sort of seized on this idea of sort of being the national car company of China. This is what the Chinese population is very proud of. This is an exclusive brand, but other competitors are creeping in there, right? There's always a certain number of contrarians that just because everyone likes something, you're going to like the other thing. And I'll tell you, to be honest, that's me. If everyone likes Nio, then I'm going to be focused on something else. If everyone likes Tesla, then I'm going to be focused on something else, right? I'm just a contrarian. That's just the way I operate. It's a logical weakness on my part, and I don't know what to do about that. But anyway, set aside your emotions and look at things rationally. And Nio has its advantages, and Nio has its challenges. Xpeng has its advantages, and Xpeng has its challenges. Xpeng is much further along with cost control and controlling the entire process of manufacturing, and therefore benefiting from rights law. And if you don't know about rights law, I did a video on that where I talked about ARK Invest and why and how they do their management. And I forget the name of it right now. I'll post it in the comments. But anyway, so all of these guys did a secondary offering to raise between $2 and $2.5 billion, and all that's going to be poured into capitalization or into capital expansion. This is a great thing, and it's also simply following the playbook that Tesla laid out there for them. So if you look at how many successful auto companies have been built over the last century, it really isn't that many. Out of the thousands of companies that have been started, almost all of them just failed in their infancy or just whimpered and died away and you've never heard of them. You may not even be aware that there's actually 130 auto brands in China, and there's basically two real auto brands here in the United States. And I hear constantly also that Nio has a full backing of government. So number one, this isn't really true. Nio has the backing of a regional government in China that's a part of the development authority. Xpeng also has that backing. When I look into how companies obtain their manufacturing license and how car companies do business, you really have to say that about every single company out there. Xpeng basically got one of these regional development authorities to build an entire factory for them, to lease it to them for very little money for the first 5 years or 7 years, and then to sell it to them at cost 7 years later. And they also agreed to help them with financing, and they give them a grant of $200 million. This also qualifies as, it's literally this exact same government support that Nio does, but I don't hear people trumpeting the fact that, Xpeng gets government support. I can tell you one thing about Chinese manufacturing. Look at the history of their internal combustion engine industry. There are 130 companies out there today in China that are producing cars. Every single one of them had hopes of being the car that China finally exported to the rest of the world. China spent 40 or 50 years trying to break into internal combustion engines, the markets. They were never able to market a car in the US. I remember seeing, vehicle after vehicle after vehicle come to car shows back in the 80s and 90s when I was a kid, and I really liked to go to car shows. All of their cars were pretty much crap. They would try to come into the small and efficient market. We don't have a huge one here in the US. It just didn't work. They tried to do it in Europe, and they were really beat on quality. They could never get big in Europe, even where they like small compact cars, just because of quality issues. And that was a huge problem. With the EV vehicles that are being produced today, those quality issues really seem to be taken care of. A lot of that has to do with China just moving upwards on the value scale of manufacturing. They're not looking at making 2-cent items in plastic anymore. They're really looking at making higher dollar value items. They're doing a lot like what Japan did through the 1980s and 1990s, where when Japanese vehicles and Japanese products first came over to the United States, they were not well regarded. They were the cheap products that broke very quickly. And slowly over time, those manufacturers moved up that value scale to where they were making, and largely this happened because their currency was strengthening, and it made imports to Japan very, very cheap, but it made their exports much more expensive. They had to find a way to combat that. So China does a lot more in the way of currency manipulation to keep their currency from floating really, really high, but they're also trying to move up that value scale in order to make items that bring more and more money in. So in electric vehicles, part of that, and the quality of the electric vehicles that are out there, by all reports, and I've only seen a couple of them, the examples that I've seen here in the US were the Candy vehicles. They were just crap. I'm not gonna lie to you. Candy Technologies makes crap vehicles. I realize that's not a very unbiased sort of explanation, which is what I'm known for on this channel. But that's my honest opinion. The Candy vehicle that I sat in felt like a cheap toy. It felt like literally a camper shell that was put on top of a golf cart. And the other thing is, I believe the fraud allegations against Candy too, largely because Hindenburg Research was so spot on with they're not always right, by the way. You shouldn't take everything they say as the gospel truth, but they were spot on when it came to their research on Nikola Motors. I did my due diligence on what they said about Candy Technologies, and it seems to be true. I'm not 100% sure like I was with Nikola, but the issue that they have with Candy seems to be true as well. This had a little bit of an effect on Nio's stock price, but look, the dilution that's happening right now, like I said, is a great thing for the electric vehicle industry in China. They don't have a way really to scale up, which is what they have to do. They're all competing with Tesla right now, and Tesla is pretty far ahead of all of these guys. So even if JAC is a huge company, right? And they're going to increase the capacity of Nio to 300, 400,000 vehicles per year, right? Sometime in the next year, they're going to increase that capacity. So as of right now, Nio's kind of reached that point where they've maxed out the capacity of the current factory. They have to build new lines. They have to do that with JAC right now because of their manufacturing agreement, or they need to build a new factory. Because they are so far behind Tesla right now, they're going to have to really focus on expanding capacity. Tesla can already make they're going to be able to scale up to 500,000 vehicles just from Gigafactory Shanghai within a year or two. They may not in the long run, Tesla may not in the long run have much more capacity than that. If they want to have more capacity, then they have to build another factory in China and obtain another manufacturing license for that location. The best way to keep Tesla from really being competition, really stealing market share away from companies like the VW joint ventures in China with, I think that's with SAIC, from Great Wall, which is another vehicle manufacturer in China, from Nio, from Xpeng, is simply not allow Tesla to build another factory. This is a 2,000-year administrative state with a long history of creating bureaucratic red tape. They don't have to do it outright. They can just delay the process for years and years and years, and Tesla would give up on building a second factory there. That is one strategy that the government might take in this case to keep Tesla from becoming dominant. So anyway, I see this entire dilution really as a positive, not as a negative in any way. And but it's going to, I want to prepare you guys for the future though. This is going to happen over and over and over and over. Tesla wrote the sort of roadmap for this on how you do this, and they were able to do it in the least expensive way because they didn't have any competition. There was nobody competing with them to make electric vehicles. China, on the other hand, is a whole separate ballgame. You mostly, if you don't follow the EV market and you don't really do hardcore research into what's going on in China right now, you don't realize that it is the wild, wild east out there. There will be 100 to 200 new companies in the next 5 years that pop up making electric vehicles. That much I can pretty much guarantee. I don't like to make guaranteed predictions. I will make this guaranteed predictions. By the end of 2022, there will be 100 different companies in China with 100 different models of cars. Not 100 each. I'm just saying there could be 100 different models of electric vehicles to choose from in China in the next 2 years. That is the extent of their manufacturing capacity there. And that is the extent of their drive towards the production of what they call new energy vehicles. And that is how much they're focused on changing this. They have a lot of reasons to do this. You know, they know that it's very polluted there, or at least it was. From what I understand, I've gotten emails from people. Things have really improved a lot since the last time I was there in terms of smog and just general pollution. But the other thing is they don't have energy security as long as they're dependent on oil, because they don't have enough of it to not be dependent on someone out there. So they're putting a lot of money into new energy resources and solar, all kinds of other renewable energy, putting a lot of energy into new energy vehicles, and this is a huge government push. I predict we're going to have a similar government push here. We won't need to push quite so hard in the US to do this, because market forces are something that are really, it really is good old-fashioned capitalism that's changing things here. Yes, there were EV subsidies that got it started, but Tesla lit a fire. Tesla lit a fire by demonstrating that it's possible to go out there to create a niche that doesn't have to compete really with internal combustion engines. There are people that want to drive these cars. There are people that want to make this a success. There are people that want to see the vision of the sustainable energy future that Elon Musk has come true. And that is what, and we're reaching this point right now where this desire and this awareness is snowballing, and it's going to be exponential. California recently passed a law stating that all cars sold in California by 2035 have to be, or not this electric, but they can't be, there can't be an internal combustion engine or diesel engine sold after 2035. I think this law is completely unnecessary. And I think the people who wrote it know that it's completely unnecessary. By the time 2035 rolls around, unless you're towing horses to a rodeo 4,000 miles away, or for some other reason you need to have a trailering vehicle or something like that to carry a heavy load, there probably won't be a ton of internal combustion engines available. And it all comes down to margin. Tesla right now has the largest margins in the auto industry, other than some like high-end like luxury cars like Lamborghini. Tesla actually has the highest margins in the auto industry right now. They're making more per vehicle than anyone else in the United States making vehicles, because there's a lot less that goes into an electric vehicle. And a lot less, put it this way, an internal combustion engine has about 2,000 parts, anywhere from 2,000 to 4,000 parts, depending on the vehicle. Your average electric motor has anywhere from 70 to 80 parts. It's a lot easier to manufacture. We've been making electric motors for an extremely long time. The manufacturing process on this is already very mature. The innovations are really coming in software and batteries right now. And the margins on making a Tesla vehicle are just super, super high. And every other company is noticing this. And why would you produce an internal combustion engine where your margin is so much lower when you can make so much more money on an electric vehicle 10, 15 years from now? That's why I'm saying this law is completely unnecessary. The market's going to take care of this. And anyway, the tide has really turned, folks. There is no way to stop the electric vehicle revolution at this point. But I do think you need to be prepared over and over and over for dilution from all three of these Chinese electric vehicle companies, because they want to be in charge of their own future and not simply dependent on these arrangements they have with these powerful partnership agreements that they have with manufacturing. And anyway, so one of these days, I'm going to make a video that's not quite so rambling about my thoughts on the electric vehicle industry when it's unscripted, and it's going to be a little bit more focused. That day was not today, folks. Sorry about that. This was supposed to be only about dilution, but maybe you can see my larger point here. The dilution is going to happen over and over and over because we're building a new industry from scratch worldwide, a new electric vehicle world, a new sustainable energy world. And I'm really excited to see what happens in the future. And I want to be on the right side of this massive transfer of wealth from the internal combustion industry to the electric vehicle industry. And it is going to be a transfer of wealth. It's going to be mostly new players. I literally see GM probably going out of business. I literally see Ford probably going out of business and having to restructure. There'll be entirely new companies here in the next 5 or 10 years. I don't think they'll exist anymore in their current form. I don't think that many European automakers are going to survive what's coming. I think they're going to be going into bankruptcy. They're going to be reformed into something new. And I'm excited about this. Yes, it's a lot of change that a lot of people are afraid of, but the world is always changing. The only constant about the world is change. Anyway, folks, those are just my thoughts on this matter today. You can tell me how wrong you think I am in the comments below. I look forward to hearing from you again, guys.